Grasping the concept of leveraging other people's funds is a defining trait of accomplished real estate investors. How come? Simply because they have honed the skill of investing in property without spending their own money. This approach is particularly appealing to newcomers and investors with limited funds, allowing them to step into the real estate market without needing substantial financial backing or credit. Meanwhile, seasoned investors utilize others' capital to liberate their own, freeing up more of their resources to invest further and increase their earnings. For those eager to delve into real estate investing without using personal funds, good news awaits. Indeed, it's entirely feasible to embark on this journey without dipping into your wallet. However, if you're not planning to invest your own money, you must have one crucial asset: a solid network of reliable contacts. The key lies in identifying who can assist you and mastering the art of collaboration with them. Let's be clear. Embarking on real estate investment without using your funds is a realistic goal. You don't need a vast reserve of personal capital to snag a great deal. What's essential is knowing how to invest in real estate by aligning with the right partners. For those looking to invest in real estate without personal financial input, might I point you in the following direction? How to invest in real estate with no money: 11 ways. Throughout the real estate sector, numerous investment transactions occur annually. Many are facilitated through standard financial institutions like banks, yet some materialize via more unconventional routes. Often, these non-traditional methods are employed because the investor lacks sufficient capital or an adequate credit rating. Let's explore 11 strategies for investing in real estate without using your own money. 1. Hard money lenders. 2. Private money lenders. 3. Wholesaling. 4. Equity partnerships. 5. Home equity. 6. Option to buy. 7. Seller financing. 8. House hacking. 9. Government loans. 10. Microloans. 11. Real estate investment trusts, REITs. It's crucial to recognize that while zero money down real estate investments offer several advantages, not every deal that avoids cash up front is advantageous. Investors with stellar credit scores gain access to a broader range of capital options and exert greater control over their financial commitments. As a real estate investor, maintaining an excellent credit score is imperative, as it opens up the most cost-effective financing avenues. Yet, there are scenarios where these no-money-down strategies are particularly effective. Take into account that cash buyers often have a more straightforward appeal compared to those acquiring properties through conventional loans, which tend to be slower. Having cash ready can give you a significant advantage in negotiations. For investors who lack both the credit rating and financial means to buy property through traditional methods, remember that you still have multiple avenues at your disposal. The list above outlines the diverse ways you can invest in real estate without needing personal financial input. And remember, if you're finding this content valuable and want to dive deeper into the world of real estate investing, make sure to hit that subscribe button. Stay informed and keep up with more videos like this to enhance your investing journey. Now, let's continue exploring the various methods you can invest in real estate with no personal money. 1. Hard money lenders. Hard money lenders differ from private lenders in their fee structure, typically charging points ranging between 3 to 5. These points are additional upfront fees calculated as a percentage of the loan amount, in addition to interest rates that generally fall between 10 and 18%. Fees and interest rates vary among hard, private money lenders, so it's crucial for investors to thoroughly research and understand these charges. 2. Private money lenders. Private money loans are known for their speed and efficiency in transactions, often costing investors interest rates ranging from 6 to 12% on the borrowed amount. The most common strategy for financing real estate investments without an upfront payment is through hard or private money lenders. These loans are offered not by banks but by individuals or businesses looking to finance investments for a return. They also typically come with their own set of terms, including additional fees and higher interest rates. A useful guideline when working with these lenders is to aim for properties that can be bought at half their market value. 3. Wholesaling. Wholesaling is an entry-level strategy in real estate investing that doesn't require a high credit score or substantial down payment. The key to success in wholesaling lies in securing properties at a discount, assigning the contract to an interested buyer, and earning a fee for the transaction. 4. Equity partnerships. Forming partnerships is a frequent approach in real estate investment. Edward Shaw, county founder of Leeline Sourcing, notes, using alliances as a standard path in real estate investments. If you're missing something as an investor, another individual can provide it. In many such partnerships, one partner locates a property being sold below market value while the other utilizes their credit and capital for financing. Each partner must contribute something valuable to the deal. For those more versed in investing, it's essential to discuss goals, risks, roles, and returns before establishing any partnership. 5. Home equity. Using home equity as a feasible alternative for investors lacking initial capital. With recent increases in property values, there may be more equity available than anticipated. Investors can either refinance their first mortgage with a cash-out option or maintain their existing mortgage and secure a home equity line of credit. 6. Option to buy. Also known as a lease option, this technique enables investors to control properties without owning them outright initially. Investors agree to a future purchase of the property from the owner at a predetermined price, meanwhile renting out the property under a long-term agreement with an option to buy later. 7. Seller financing. In seller financing, the investor buys directly from the owner, bypassing traditional bank loans. The buyer and seller agree on terms including interest rate, repayment schedule, and default consequences, tailoring the deal to suit both parties. 8. House hacking. House hacking involves investors renting out portions of their primary residence. Those with multi-family properties might rent out unused units, potentially covering their mortgage payments. Single-family homeowners might rent out spare rooms. This strategy helps manage vacancy risks while generating steady cash flow. 9. Government loans. Government loans are well-known funding sources for investors, including FHA loan, USDA loan, VA loan, Good Neighbor Next Door program, Fannie Mae or Freddie Mac, Energy Efficient Mortgage, EEM, FHA, Section 203(k), Native American Direct Loan, local grants and programs. However, these loans often aren't ideal for quick property rehab and resale. VA loans are limited to one property at a time, and FHA loans usually have longer terms compared to private loans. Additionally, the approval process for government loans can be lengthy, making them less appealing than other options. Using USDA or VA loans, especially when buying a primary residence to later convert into a rental, can be strategically advantageous. This approach allows for no down payment and more lenient credit and down payment requirements. Investing in a duplex with an FHA loan, for instance, requires only a 3.5% down payment if living in one unit while renting out the other, thus covering a significant portion of the mortgage. 10. Microloans. In the peer-to-peer economy, microloans remain a significant option. Issued by individuals rather than traditional financial institutions, they are part of the growing trend of peer-to-peer lending, enabling direct investment in real estate. Microloans can come from a single lender or a pool of investors, each contributing a portion of the total amount needed. 11. Investing in REITs. Real estate investment trusts, REITs, offer an accessible entry into real estate investing. Instead of buying physical properties, investors purchase shares in companies that own or manage real estate. REITs provide a way to enjoy the benefits of real estate investments, akin to stock investing, and are excellent for generating passive income without the need to directly purchase properties. Can you invest in real estate with bad credit? Lacking cash or credit isn't a barrier. For novices interested in real estate investing without upfront capital and with less than ideal credit, the initial step is to grasp the significance of your credit score. This figure is a tool used by lenders to assess the likelihood of you repaying borrowed funds and plays a pivotal role in obtaining real estate financing. A higher credit score often leads to more favorable mortgage terms, which translates into long-term cost savings for you as an investor. Credit scores typically follow a rating system, with FICO being the most widely recognized. These scores span from 300 to 850, reflecting an individual's creditworthiness. The categories usually break down as follows. Very poor credit, 300 to 600. Fair credit, 600 to 649. Average credit, 650 to 699. Good credit, 700 to 749. Excellent credit, 750 to 850. While credit agencies may have varying evaluation methods, they commonly factor in 5 key elements. Payment history equals 35%. Current debt balances equals 30%. Credit history length equals 15%. Variety of credit accounts equals 10%. Credit inquiries equals 10%. Understanding your credit score is crucial as it influences your investment approach. Your score could determine eligibility for conventional loans and down payment assistance programs. Knowing your position in the credit spectrum not only improves your real estate investment strategy but also expands your financing options. While investing in real estate with no money down is an invaluable skill for an investor, remember that it's not the only path available. Avoid becoming house poor. In the realms of real estate and finance, there's a term known as being house poor. This refers to individuals who overextend their finances while acquiring a home, leaving them without a safety net for emergencies. Such homeowners, faced with unforeseen circumstances like job loss or appliance breakdowns, find themselves in a financial bind that's hard to escape from. Regrettably, this situation is quite prevalent among those trying to invest in real estate without any reserve funds. To steer clear of financial distress in property purchases, it's wise to maintain an emergency fund that's distinct from your other assets. This fund shouldn't be factored into your budget for buying a property. By doing so, you ensure there's a financial cushion available should unexpected expenses arise. Sometimes, preserving your emergency fund might mean opting for a smaller down payment than desired. However, it's important to remember that although you may need to pay for mortgage insurance initially, there's always the option to refinance later when your home's equity has increased. And that wraps up our journey through the world of real estate investing with minimal financial input. As we've explored, entering the property market without a hefty bank balance or a perfect credit score is not only feasible but can be a smart strategic move when done correctly. However, it's important to proceed with knowledge and caution. In the realm of real estate, knowledge is power, and the right information can be the difference between a successful investment and a costly mistake. To continue building your understanding and to ensure your investment journey is as smooth and profitable as possible, I highly recommend checking out our next video, which delves into the crucial topic of real estate mistakes to avoid. This video is a treasure trove of insights, offering guidance on common pitfalls and how to steer clear of them, ensuring your investment decisions are sound and fruitful. So, if you're committed to making informed and successful real estate investments, click on the video appearing on the screen now. Dive deeper into the nuances of real estate and arm yourself with the knowledge to navigate this exciting market with confidence. See you there.